Welcome back to this next video in the Unlocking Your Crypto Journey educational series. In this module, we've talked a lot about blockchain and cryptocurrency, and I think sometimes we come off with a very positive attitude because we're in this space every single day and we see the potential of this space and how it is progressing. But as with most things in life, there's always a positive and a negative to everything. So because of that, I've brought back BC PortCorp to help me go through some of the advantages and disadvantages of cryptocurrency at its current level of technology. So let's get into the video. Welcome back. We're continuing on in the Unlocking Your Crypto Journey educational series. And as we do, I've brought back this guy, BC, because he's going to help us talk about some advantages and disadvantages of the cryptocurrency space, because with the good comes the bad, right, BC?
Oh, always. You never get some good without some bad, but anytime there's bad, there's room for improvement. And that's what crypto is all about. Improving upon old systems.
Yep, which again, if you're coming into the crypto space, that's probably something that's of relative importance to you. Call me crazy. Again, much like we've said in previous videos, if we go into the deepest, darkest recesses of this kind of information, we could literally be here for multiple videos. And we're trying not to do that today. We're going to try and keep it concise, and we're going to try and hit some very specific areas. BC, I'll tell you what, why don't you start us off and let's highlight to everybody that's here what we're going to be talking about. What's the first area we're going to talk about?
Well, I came up with 6 areas for the crypto space that really highlight what crypto's good at. Within those sectors, I kind of talk about the kind of drawbacks, each of those different points. That first big point, which, if you're in crypto, you really understand, it's transparency and trust. And that's a big part of, if you're in crypto, what we talk about to other people. Because it's like, oh, Bitcoin, I'm gonna try to shill you in my daily life this Bitcoin. And they're like, wait, isn't that scam token? And I'm like, well, let me show you this real quick. And I'll show you every transaction that has ever occurred on this blockchain. That's a big strength for the crypto sector. And so we couldn't leave that one out.
And BC's right. It comes down to trust, but in actuality, you want to be trustless, right?
Mm-hmm. And see, the reason that the big part of why they say a trustless system is not that you have to, it's not that it's not trustful, it's that you're not trusting in anyone.
Exactly.
You're trusting in the system, and the system shows you undeniable proof that it is working.
Exactly. That's only the beginning of what BC came up with. The next section of what we're going to talk about is speed and settlement finality. Because let's be honest, when you're sending money using the current banking system, it's not necessarily quick. It just ain't quick. And here's the other thing that most people don't even know is that, it looks like you paid with your debit card and that's it. You walked out of the store. But at the end of the day, that actual transaction isn't settled for days, maybe even weeks in some cases. So having the ability to not only send a transaction quickly with cryptocurrency, but to see on the blockchain, like he just mentioned, in complete transparency, that it's settled, that's huge. BC, what else we got to talk about?
Well, there's also accessibility and inclusion, because that's something that you don't always get with your traditional system. We've all heard about debanking. It's a harsh reality of the current world that we live in. And if you've heard any of these deep stories about these people that were debanked, it absolutely sends their entire life into some turmoil. You can't do anything if you've been debanked.
Right.
And that shouldn't be a thing that happens to anyone. You should have the freedom and the ability to transact with anyone at any time for any reason.
1,000%. And listen, you don't have to be in this space for any length of time without coming across stories about somebody that got debanked because of cryptocurrency. Just saying. All right. Well, That's not where we're ending off, though. And kind of to the point that he just made, we are going to talk about control and ownership of your cryptocurrency. And the reason why they can debank you in the first place is because all those nice little numbers that may show up on your banking app, guess what? That's all it is. It's numbers showing up on your banking app. It doesn't belong to you. You have no control over it. And you certainly don't own it until you go to the bank and take out the physical cash, right? So having the ability to do the movement of ownership of proof that you own it with this digital currency called cryptocurrency is a huge deal. But we're not done there. Go ahead, DC.
Well, there's also a big part of crypto which has to do with more than money. And that kind of highlights the programmability and the innovation of cryptocurrency. We touched on it on the last one, things like smart contracts, DeFi, the lending and borrowing, paying the yield on the money. Those are all things that you see in your traditional systems that are needed if you want to replace those systems with the new crypto system. You also have things like governance. We highlighted that one in DAOs. That's a big part of the innovation aspects of the crypto space. And that's just the very newest things. Who knows where crypto goes next? And I'm sure we'll be hearing lots of fascinating things as crypto moves forward.
Agreed. And you're right. That governance is huge. And like BC said, we discussed DAOs in the last video. And honestly, we'll be doing it again in a more advanced video. But that is how you are able to help as a group control things. And not for nothing, also helps with the coordination between these blockchains. Just saying. What do you think, BC? Why don't we go back to the top here, and we'll start popping out a couple of examples of some of these advantages and disadvantages. How's that sound?
That sounds great.
All right. Kick us off, bud.
Well, we started out by talking about transparency and trust. And that's the key selling point when it comes to crypto. Nothing ever happens without you being able to clearly look at the blockchain, or if it's a ledger, the ledger of every single transaction that has ever happened from the beginning until the last transaction that had just happened. You know from what address sent what amount and which address received it. And it's not only in that record is not only kept on that blockchain, but it is kept by thousands of people when you're talking about Bitcoin. Sometimes it's a little less on other cryptocurrencies, but it is validated over and over and over again in a chain that you can at any time go and check. As soon as you send a transaction on, say, Coinbase, it sends you a little receipt. If you click on that receipt, and it's like it takes you to the block explorer, and it literally shows you that that transaction happened and that the money was sent from this wallet address, and it was done by, say, this miner or this node. And then it shows you how long it took to validate that, whether it be several seconds or a couple minutes. If you're using something like Ethereum, you get to see how long it took and then get to see where that money was sent to. So you don't have to just believe that it works. You get to trust and verify that it worked. And everyone else knows it worked too.
Yep. No, exactly. And one of the points that you just mentioned was that it happens over and over and over again. Because remember, folks, the blockchain kind of builds on each other, right? And these transactions that have occurred, at some point, they don't even have to hold all that information in every single node. It becomes like a batch think about a batch transaction. It's a little bit more complicated than that, but for the sake of helping you to understand, let's go with that. But the fact that it continues to be verified, basically ad infinitum, is great. It's absolutely great, and a huge point to the transparency and the not needing to trust anything more than the actual smart contract or blockchain itself. That's Double thumbs, man. Double thumbs. Much different than the system we're currently used to.
Most definitely. But like, if you went to your bank down the street and were like, "Hey, can you actually prove to me that you have my funds in your bank? That you also have the rest of the funds that everyone that banks in my local area? Can you prove that you have the reserves of this?" No, they can't prove that to you, and they also don't even have to keep that. So who's to even say if their balance sheets are even on the dot? You know, they're sending out money and receiving money daily, thousands of times a day for every single person that is transacting on that network.
Yep.
And, you know, sometimes things slip through the crack. You know what doesn't slip through the crack in the crypto system? All of that. Because
I was going to say anything, right? Yeah.
Yeah. It's all verifiable and open. You get to see if someone's like, well, I have these funds. And it's like, okay, well, prove it. You don't even have to ask them to prove it. You're like, okay, what's your wallet address? And you go and you check to see if these funds were ever sent to this person's wallet. If they were, then they have that. If they don't, then they don't. It's very, very easy.
It's easy to see. Yep, absolutely. And listen, for those who don't believe what BC is saying, if you've got a decent amount of money supposedly in the banking system, you go ahead down to your bank and say you want to take out $10,000 today. Beside the fact that they're going to ask you what the heck you want it for, which of course is none of their business, you're going to have to come back because the likelihood is they don't have it. It's not sitting there in the bank anymore. I'll put a link to the description of fractional reserve banking in the description. After you're done watching this, you go ahead and check that out. That'll give you some more edumacation, as we were saying in the last video.
Or a giant headache, whichever. Fractional reserve banking makes me angry and gives me a headache.
Yeah, and it should make everybody angry. Yeah. Yep. Facts. But I'll tell you what, like we mentioned, BC, you know, before we move off from this point, with the good comes the bad, right? What are some of the disadvantages of this whole transparency thing?
Well, you know, sometimes transparency can be a little bit of a hindrance. Say, like with your example in the last video, I want to send my doctor's records over to this doctor that's in a different network. And I want to do that without everyone else that's able to look at the blockchain, seeing all of my medical history.
Right.
Well, you know, that could be a bit of a problem with most cryptocurrencies. So there is a sector of crypto, which is called privacy coins, which kind of helps to take away some of that transparency and provide a little more security, but also still have the trust and the trustless system.
Yeah.
So instead of you getting all of the information at once, you're getting it in pieces. If you can verify that you know the other end of this key, it is sent through, and then you are able to open and see that information. If you don't have the right one, then it keeps moving along until that right one is actually fit in there. These are things like Monero, there's Zcash, there's Ksync. It's called zero knowledge proofs, which means that you're not actually getting all of the information on the blockchain. You are seeing that transaction happened, but you don't know exactly what's inside of that transaction.
Right. Because at the end of the day, I mean, Bitcoin was a beautiful thing when it came out. And the whole idea of transparency, so you can see, like BC said, I can't just say the check is in the mail anymore. You can actually look to see if the check can be in the mail. But along with that comes things like we battle with in a lot of different sectors in, you know, all aspects of our lives, the balance of privacy and actual reliability with regard to this information. So it's tough. It's tough, but there are things out there, and much like we mentioned in the last video, this technology is improving all the time. So hopefully, as we continue to move forward, things like, and he re-highlighted my medical files example, that can be done well. I can control it, all of it, decide who gets it, and I can still get it to them without it necessarily being like, hey, BC's going to go and look and see I got a hangnail, you know, on the blockchain.
Well, if the hangnail is the worst of your problems, then
I know, right?
at least you're doing okay.
That's a fact. All right, BC, why don't we head off to our next point and hit some of the advantages with regard to speed and settlement finality?
You kind of highlighted a big part of the speed and settlement when you talked about when you go to the store and you swipe your little credit card or you swipe your little debit card and it says, oh, well, the transaction went through. It didn't actually go through. Let's just actually say right now that transaction didn't actually go through.
Yeah,
What
it is not
happened?
final.
Yeah, no, the bank communicated the little swiper sent out a signal to your bank account to verify that there's at least the amount of funds to cover said transaction. Your bank responds back, yes. And then that money is put in limbo in your account, which is where you see those pending transactions. If you've ever looked at your bank account, it'll say pending transactions. That's transactions that they say went through, but it's not actually went through yet. A lot of the times it takes anywhere from 3 days to 2 weeks for these transactions to actually settle. And, if you're a business and you're trying to run things, you might need that money right then and there. You need to buy products to restock. Well, you can't do that if your money is in limbo. And that's where, that debt system is a very big system. And it's even a bigger proponent when you have this money in limbo all the time.
Yep. And it's even within their own system.
Oh, yeah.
I'm going to go. I don't often in these videos break into story time, but here's a story time for you. Okay. I sold a house about 1.5 years ago. The people who bought the house, it was a couple of guys. It was a private sale kind of thing. Obviously they weren't into crypto, so it was bank checks, right? So they each gave me their bank checks. Well, one of the bank checks was on my bank. So I went to my bank and handed them that and was expecting it was going to be an immediate credit to my account. And they said, oh no, there's got to be a 5-day hold on this. And I'm like, it's literally your check. Mm-hmm. And they're like, oh, well, we didn't issue it. No. This is your check. Yeah, but we didn't issue it. Well, then I suggest you figure out who did and make sure that you're all set, because I'm not waiting 5 days for money that should already be in your banking system. So they don't even trust themselves.
No.
They don't even trust themselves. Just saying. So I'm sorry. We might be a little bit more bullish on all the good news about crypto than we are about some of the disadvantages. But
this past week, the payroll system at my job was down. So they had to issue paper checks. And my bank tried to tell me that'd be 2 weeks before I had my paycheck.
Yeah.
Like, what do you mean, bro? I need that money now. I gotta go buy groceries. Who are you playing with? That's my money.
Yep.
You can't just hold it for 2. Well, yeah, we're just we have to check and verify. What do you mean you have to check and verify? That sounds like not a me problem.
Exactly.
That sounds like a you problem. Maybe if you guys weren't so old and outdated and used something like crypto, you'd have those funds there immediately, which is a big part of crypto.
Yeah. Absolutely. It's funny to the end of my story time. At the very end, when it was all over and they finally verified it, and oh yes, okay, we're good, we got the money. I said, and this is why crypto is going to put you out of business. And I left with my money because it's the truth. I wouldn't have had an iota of that problem with any crypto transaction. Pick a blockchain. It doesn't matter. It doesn't matter
at all. I mean, even Ethereum, one of the slower moving blockchains, you'd at least have that money in like 10 minutes. Bitcoin on its worst day, it might be 15 minutes, depending if you didn't want to pay higher gas fees. You could make it wait for, I don't know, like an hour and pay very, very little gas fees on Bitcoin. So it's all about how fast that money needs to be there. But even then, you could go over to Solana or
I was
XRP,
just about to say, pick a different solution.
Or Avalanche. All of these will transact within seconds and settle the transaction within seconds. So why do I need the TradFi system?
Yep. And I'm going to just put out a shout right now for Dash. And if you don't use Dash, you haven't used Dash, man, I'm going to tell you, link is in the description to an entire playlist of living on crypto. Go check it out. By the time I'm done in that series, as I'm walking through using stuff like Bitcoin and Litecoin and so on and so forth, it's like dash for the win. That's all I'll say. There's the punchline right there. Dash for the win. For the reasons right there that BC just said. Talk about lightning fast and final. That's the key. Boom. Done. And has built-in privacy. But again, I'm not here to shill Dash to you, but go check that out. But BC, you know what? Again, with the good comes the bad. Let's talk about some of the disadvantages in this neck of the woods.
That big hurdle that crypto has not yet seemed to get over is the throughput in comparison with something like Visa, MasterCard, PayPal. All of these have a very, very high throughput. Network congestion causes a lot of hamperings for your crypto projects right now. Even Solana, who can handle something like 60,000 transactions a second, that's nothing in compared to Visa.
Right.
Visa is the top when it comes to handling transactions per second. And that's a big competition for crypto to kind of deal with. That's also another reason why your traditional systems don't settle payments instantly. They're just like, money there, cool, let's go. And they keep going. That's a part that allows them to move a little bit faster, but also is a lot slower on the back end. That's something that crypto, we first decided we were going to deal with the settlement, and now we're going to focus on the speed. You know, there's things like layer 2s, which kind of assist with making these things a little bit faster, a little bit cheaper by normally batching transactions like you had talked about earlier. It's not all in that big block. We batched it in a block here. It's sent on top of that blockchain. That is a block of a whole batch of transactions. So,
like I said, it was a little more complicated than I was saying, but I wanted to make it simple.
Oh, yeah. It's just think of it as this. You have a block here. It's built up of a lot of transactions. Well, that might be a little bit slow to move from here to here. Well, on top of that, we're now going to branch out. We're going to have 3 blocks built on top of that are all batched transactions that all end up going into one block. You're now able to put a whole lot more transactions in one block without having things slow down. That's basically what a layer 2 does. Arbitrum, Optimism, ZK Sync. These are all very good, cheap options for Ethereum. They also kind of give crypto that little bit of a leg up, especially when you're talking about some of your bigger systems. Solana, you start adding L2s on that, woo boy, you could take down Visa extremely fast. So,
and other blockchains are coming at it from different ways. Cardano, for example, thinking Hydra, with the different heads that come up to handle all these transactions, which means you can't even measure it like you'd measure a traditional blockchain, to be completely honest. And again, the technology is slowly coming, and boy, once it gets here, like BC said, how'd you say that? Woo! No.
Oh yeah.
Did I get it right?
Oh yeah. It's just so exciting to think about completely changing the world as we know it, making it simpler, a little bit more trustful, a little bit more transparent, a little less worrisome. You know, that this is the future. And you can either get with it or you can get left behind. And that's what we're saying to these banks.
Yep, absolutely. And to the point of left behind, the next point revolves around being able to even use the system, having access to the system. Man, if you don't have an ID, or you can't get an ID that's acceptable to a bank, or if you live in a country where that's just not even a possibility, guess what? You're locked out. None for you. You can't do anything in the traditional banking system. And let's be honest, having had businesses, you sometimes got to send large transactions. You sometimes got to send those large transactions outside of the country. And if the bank's compliance department doesn't like where you're sending that money, it doesn't matter what your branch manager says. The compliance department says, and that's that. Your transaction's literally dead in the water. Not so much with crypto. BC, explain it to the people.
Crypto's extremely easy. If you have internet and you have a smartphone, you have crypto. That's literally all you need. You need internet and you need the ability to access the internet. And you can be involved in a completely new banking system. You don't need a bank account. You don't need a credit score. You don't even need an ID. There's plenty of places. I know, like here in America, and KYC is a very big thing, but you don't have to KYC to use crypto. They would just like that you do it because they like their tax dollars. If you're using crypto to kind of transact with, you don't really need that. DeFi system, I'm just sending money from here to there. As long as I know that this wallet address is the correct address for who I'm trying to send money to, then it's all gravy. I sent it here, you got it, move along with my day. Nobody else touched it, nobody else saw it, nobody else could put their grubby little mitts on it and tell you, well, actually, you can't send money to Tanzania because we have an embargo with them, and it doesn't matter that you're trying to buy this good from that country. No. It's like, I don't think so. This is freedom and libertarianism at its finest.
Yes. And a lot of that, just to that point, has gotten clouded these days here in the cryptocurrency space, let's be honest. And the longer you're dipping your toes here and learning more about the cryptocurrency space, you'll see what I'm saying without getting into details. And I would love to see a lot more of that libertarian ideal and cypherpunk ideals that BC and I actually talked about way back in that first video and come back to this space. Whether it will, whether it won't, time will tell. But that would be the ideal situation to have in order to transact and be included. And you could just do whatever it is you damn well need to do. But again, there are challenges. There's always a challenge. And I just got to say, one of the biggest challenges is wallets and being able to actually have control of your private keys. And especially for people who are either not tech savvy, I'll say it, my age or older, it is what it is, or potentially, depending on what type of device you're utilizing, that kind of thing. Okay. But for the most part, that, in my opinion, becomes one of the biggest challenges. BC, what do you think? Am I off base with that?
No, I would definitely agree with that. The wallet system as it is, extremely secure, but a little bit technologically difficult for anyone that doesn't have a full understanding of even how to work a smartphone. So people like my great grandma who are still using a flip phone, crypto systems kind of not in their future. But as we get more and more tech friendly as a culture, which is, happening with a quickness, you will see more and more developments in the wallet space, which, we have seen a few. There's things like the Argent wallet, which makes it very, very easy to use crypto. I know on your show earlier, Crypto Jar was talking about a wallet that is also a two-factor authentication device.
Yes.
Physical two-factor authentication devices make these accessing of your wallet a little bit easier. And there are several ways to go about that. So that's just one very, very easy move forward on the wallet space, but we're still a little bit ways behind on that. The other kind of big disadvantage in that area is the user interface. It can be a little bit clunky at times.
Yep.
That it's far, far behind your traditional banking apps. But, all of this is still pretty brand new. You have the Bitcoin Core, which still runs amazingly. Very, very, very simple and easy to use. The user interface is very, very basic, though. You don't really need a whole lot with that. But as you start adding new things into crypto, like Solana, adding an email, you're going to need a better user interface. And so that's one of those real challenges that you're kind of going to have to watch crypto to see how it tackles that. Also a big thing, if you're going to have Web3, you need a better user interface. So
Yep. No, 1,000%. And listen, I know we're kind of like really lingering on this particular issue a bit, but because right now, as we speak, and especially for those of us who are interacting on a almost literal daily basis, it can get a little bit frustrating, get a little bit aggravating, you know. But here's the thing. The technology is coming along, like BC just said, and these user interfaces are getting better. And frankly, you can find decent user interfaces in stuff like Coinbase, for example, or Gemini. But realize the trade-off for that is from a decentralized, you control it, to a centralized, they control it, which is why the user interface looks so good. That's why your banking apps on your phone look so good, because that's not really your money. It's all there. So, but the good news is, at the end of the day, that there is people who are willing to help. First off, if you're new to crypto here and you really think that that's your stumbling block, these are your stumbling blocks, reach out. There are groups here that will help you. But beyond that, realize that even maybe by the time you're watching this video, technology has progressed enough where that is even less of a challenge than it is today. BC, anything else you want to highlight in that area before we move on?
Not really. You kind of opened the door to that next little segment there. And that was control and ownership.
I wasn't even thinking about that. There we go.
No, that was a perfect segue straight into control and ownership. You know, we've said it here enough on this channel, and that's self-custody. Because if it's not your keys, it's not your crypto. And that's a very, very big part of the crypto system. Why would you want to exit the banking system where you don't own any of your own money to come over here to the crypto system and be like, hey, Coinbase, I illicitly trust you with all of my funds. Yeah. Please don't screw me over. Like, what? That doesn't make any sense. But
but yet people do it every single day and have gotten caught in a number of things. And I'll just throw out a few, and I'll put links. Again, you can go follow up. It'll give you good reference material so you can understand some of the dangers of using these centralized entities. And maybe BC will even throw in some I forgot. I mean, FTX, huge exchange, also huge scam. But anyway, FTX, Celsius, another one. I mean, again, thought it was going to be, I'm not going to lie, I thought that was going to be a good bridge between TradFi and DeFi. But not so much. BC, what comes to mind for you?
There's been several experiences with just crypto projects in general as well.
Oh, yeah.
You know?
Oh, I wasn't even thinking about that. I was just thinking about this.
Well, so like I was starting to think about like the DeFi pools, where it's like, okay, well, here's this supposed pool. I'm putting my money into it because they say that they're going to give me a 60% yield, and then they just kind of rug everyone. So that's another thing. You let go of your keys. You let go of your coins. You no longer have those. And it's kind of hard sometimes to get these back, which is something the TradFi system kind of has a little bit of a leg up. You know, if someone steals your credit card and they make an unauthorized transaction, they're normally pretty good about making sure you get that money back.
Sure.
But that was never your money to begin with, so what does it matter?
Right. They're helping themselves, basically, is what they're doing.
Yeah. And at the end of the day, if you're actually treating the crypto like it is your money, which you should be because it is your money, then you should be taking every single measure that you can to possibly keep that money in your possession. I think there's been a big disparity from the traditional systems of ownership of money. You're like, oh, well, you know, it's just it's just numbers in the bank account. It doesn't matter. It go up, it go down, but I never touched any. There's a very, very big removal from actually spending any money. And crypto will kind of get us back to that. But you got to take your security extremely, extremely important. Because otherwise, you're going to be screwed. Hard, sideways, with a brick, with no lube. It's going to happen.
Oh my goodness. I'm laughing, but everything he just said is 1,000% true. 1,000% true. And getting our society to the point it is now where the trust, the bank will take care of it, the bank will take care of it, the government, the FDIC, the this, the that, the whatever, they'll take care of it, in my opinion, has come over generations to where we are right now. And BC said a statement. I'm going to repeat it right now. Not your keys, not your coins, right? Not your crypto. And again, we haven't really dived too deeply into what private keys are. We've talked about them in a number of videos, mentioned it. I put links, and I'll do it again in the description here, so you can go ahead and do a little bit more of your own research till we get to that video. But suffice to say that these private keys are literally your crypto. They are the literal keys to the kingdom. And that, to me, leads us into one of the biggest disadvantages of that here right now, the ability for getting people to realize that you do own it when you have your hands on these keys, and that you need to back up like wallet seed phrases so you're not losing access to those keys, because all wallets are. Okay, I know we started talking about wallets earlier, BC, but maybe this is the point we should probably say it. Listen, folks, cryptocurrency wallets don't actually hold your crypto. They hold the private keys to your crypto, gives you access, control over those assets. The crypto itself resides, never leaves the blockchain. That's it. That's where it is. So, and again, I know that may be confusing. That's why I tried to just break it down a little bite size right there. But the fact that that is the case, to me, puts, because of our current level of technology, because of the way people are currently thinking about utilizing the banking system, which is why people just leave their money on Coinbase or some other exchange, is a stumbling block in this particular section. You want to throw some fuel on the fire right there, BC, with regard to that?
It is a very, very big issue that if you lose your keys, you kind of lose some access. There are some ways that crypto is trying to deal with that. Social recovery wallets, things like Argent. I brought that up earlier. There is a way to kind of restore your access if those keys are lost. And it brings a little more of that safety into the crypto system without really sacrificing the security. As time goes on, I'm pretty sure we'll see more and more like that. There's also MPC wallets with split custody. Those are kind of those Coinbase custody. They have part of the keys. You have part of the keys. So they don't actually have full access to all of your crypto, but neither do you. But if something happens on your end, they can help you on their end. Not fully yours, not fully theirs, but like it adds a little more safety in case you're a buffoon and you lose your keys. You're like, oh, well, I don't know how that happened. That's where you hear these old methods of etching your keys in just a metal block, and you have it in your safe. That's a very old method. It's been around forever. Write it on a piece of paper, put it in your safe. Very, very easy method. But we'll see as technology moves forward if there's more and more things that kind of add to that ability in case something happens. Because, there are kind of uncontrollable situations like a house fire. Not all safes are fireproof. If you lost your keys, you kind of screwed there. So we'll see as technology moves forward. TradFi does have us beat on that. I will give them that.
Yeah. Yeah. Well, they don't have the money in the safe anyway, but that's
well, that's true too. But
okay. Enough dissing on TradFi. We're here to give you some education. So let's continue on with that, and to that end, and stuff like, I'm glad BC brought up about wallets that are split like that. I was going to mention multi-sig wallets, and it that kind of thing leads me into this next section, which is talking about programmability and innovation. We keep saying that technology is moving forward, and that technology comes on a bunch of different fronts. Not only the actual maybe physical hardware, but also the software, the coding, the things that run in the background kind of scenario that are evolving all the time. And again, bullish about the way and the momentum that this is going, 100%. But again, good and bad. BC, talk about some of the good pieces of that, and then we'll come around the other side of it.
With programmability and innovation, you're watching money move in ways that we've never really seen it before. And it's quite mind-blowing. You have DeFi, lending money like that. A banking system doesn't really loan money that quickly. You got to do your whole credit check, and then they got to run your background, and then they got to make sure that your actual source of income is actually verified, and then they might change the interest rate on you, and
yes,
might take a few days for them to actually ever approve the money into your account. It's very slow and it's very clunky. It's a lot more legally binding, which, that is a little bit better on their end. But you're able to see life and money start moving at the pace of the internet with crypto and things like smart contracts and
yes,
DeFi, where you're lending money. You have it with trading that's moving like the snap of a finger extremely quickly. You have governance in ways that we've never seen before, where we're choosing how money can work. The TradFi system, they choose how money works, but they do it extremely poorly. You've got your government running at a massive deficit, and they can't seem to get their hands out of the cookie jar. What does allow them to get their hands out of the cookie jar? Their hands were never in the cookie jar in the first place. So governance is a big part of how you get that done. And that's the small side of innovation that we've seen happen with crypto. Gaming is another big area where crypto really can excel. We've talked about it before. NFTs, we all have heard about them. If you've been in the crypto space, these non-fungible tokens that you kind of hold on to, and they don't really do anything, but it's a cool monkey on a yacht. Like, woo! Like, gaming could allow you to send, hey, I have this skin that I have in a game, and my buddy really likes it, but I don't want to sell my whole account to him. How can I just send him the skin? Well, crypto. Make that an NFT that you have ownership on. It's built on a blockchain. You can send it right on over to him, and he sends you something back in exchange. Or you just send it to him and you give it to him. And now he has that. And then you need it back later. Very easily send it back later. Crypto, quite amazing at innovating.
Yep. And, you've heard BC several times in that discussion and explanation mention smart contracts. Again, an entire video coming with regard to smart contracts. But I guess as good as the smart contract is at making this stuff work, it's also potentially the Achilles heel of everything, because these smart contracts, again, it's code. And much like I mentioned in the beginning, it's like it's only as good as the guy writing it. Let's be honest, or the honesty,
or the AI bot writing it.
Or these days that's true. These days that's 1,000% true. Yeah, facts. Some of these AIs can write code better and quicker than most humans these days already. Whew, there you go. AI plays, guys. AI plays. Okay, not financial advice, but again, while they're the biggest asset they're also potentially the biggest Achilles heel. So there are many platforms out there that'll do things like check the smart contracts for bugs and all this other kind of stuff. And like BC just said, heck, they got AI doing it now too. So this stuff is completely verifiable for the most part. But again, that doesn't mean that everybody takes the time to do their due diligence before they're connecting their wallet to the smart contract and thus possibly giving a malicious actor access to their wallet. So anything else you want to add on that, BC, before we kind of move on?
I do like that you had brought up the whole auditing. There's things like Certic or Open Zeppelin. Those are a few sources that you can kind of check to make sure that your smart contract is actually the legit one. Because, you know, with these smart contracts, you have seen an abundance of scams. It might look like the official site. Don't connect your wallet to it unless you've actually verified what's going on here, folks. Because that's your money. The other big part of the smart contracts, sometimes you do run into some problems. The code isn't written as well as it should be. Everything kind of just like breaks. Well, that's something we will watch going forward. There are insurance protocols as well to kind of allow for some security there, which is a big part of what I am looking forward to in crypto. Completely taking over the insurance game. Because, you know, these insurance companies are completely scummy, and smart contracts along with DeFi and DAOs all together can completely take over the insurance companies. You put your money in the DAO, y'all vote, you have a smart contract that is tied to this claim. If this is actually done, you get your money. You had a car accident. Boom, you get paid out as soon as you submit the claim and it is verified extremely easily. And no more, well, I put my money in and they're not going to give me the full amount of my car. So what the heck is this scam thing anyway? Why did I give you thousands of dollars for you to give me $500 for my car? Like, no more of that. Change the insurance game.
Yep. And listen, I know we're going in a lot of different areas right now, but realize, again, technology is changing and advancing and bringing these kind of things slowly into the realm of a lot of the stuff that we're already utilizing. Case in point, and I'll put a link or a couple of links in the description. Just recently, as of the recording of this video, Tangem Wallet. You guys know I love Tangem Wallet for a hardware solution. They just integrated a service with Blockaid is the name. And basically what it does is when you're using Wallet to connect to one of these, which is what you use within Tangem to connect to one of these Web3 type properties, it automatically scans that code. And if there's an issue, you get a warning that says, maybe you don't want to do this. You know, you get a security alert. So like, that's huge. And the fact that now I love it because it's Tangem. I love promoting Tangem. Again, if you're looking for one, link is in the description, 10% off, you use it. But even if you don't, that is going to end up becoming, like, for example, the standard with a lot of these wallets, because guess what? People are going to demand that kind of thing, because when you do something like that, it doesn't always come up readable where you can see it. It'll come up and show you what you're signing. Because when you connect that wallet and you say approve, you're signing the transaction, giving them permission to do whatever that says. And a lot of times the way it comes up when it's malicious is not really readable. So it doesn't say, hey, yeah, we're going to steal your money. No, it ain't that simple. Even though that's exactly what's going to happen the minute you press approve. So realize, like I said, I'm going off on a bit of a tangent, but realize that the technology is moving in this direction. So as much as, yes, there are disadvantages to a lot of this stuff, as of the recording of this video, hopefully you're going to see this change in hopefully a pretty quick pace. BC, we got one more section to go through. You want to go and start us off there?
We kind of touched on some of it.
We did.
A portion of that is governance, which is things like DAOs, which we talked about in the last one, where it's very community oriented. You put your funds in to a group. The group gives you that ability to vote on what happens with those funds. And it's very, very different from your TradFi way of doing business. You put
Yes.
your money, you put your money into a stock. If you own a high enough percentage of that stock, they will allow you to listen in on the boardroom meetings, and you can kind of vote on the direction of the company. But if you don't have that big of a holding, you don't know what the heck's going on. And that's very, very different than a DAO system of operating in, say, government, in your local groups, how we had talked about on the last video with taxes. I pay my taxes. Well, I kind of split it up into these different sectors, maybe a road DAO, maybe I wanted to go to the school DAO, and you get to have a direct impact on your local economy. So I'm a very, very big proponent on where DAOs can take us and dismantling the system that we currently live in. So
I agree, and I love the fact that you brought up the government thing. I really, really do. And I know we mentioned it in the last video a little bit, but since we mentioned it in that last video, I've been doing a lot more thinking about this. And I look at it very much like, because we would actually have the control. If we were part of that DAO, we would have the control. Think about it now. For example, for those, again, this is for those who live in the United States, this is gonna be like, why are you saying this? But for those who live outside the United States, basically here in the US, we vote, we send a representative to the federal government who is then supposed to vote on our behalf on laws and all this other stuff, theoretically, where they're spending my tax dollars, which, yeah, right. Anyway, but not to get too far off track, that's what they're supposed to be. They're supposed to be that kind of DAO for us. They're supposed to be there taking and doing the will of the people. They don't do that anymore. But a DAO is code at the end of the day. It is a group of people operating in conjunction. And you want to know what? That's how. Now, that doesn't mean you're going to win everything you want, right? I mean, like BC and I used in the road example, maybe, you know what, his road gets done this time because more people thought his road was more important than my road. Okay, fine. But at least there was a shot that whatever road that was important to me had an equal opportunity to be like, boom, that's the one that gets done. I think DAOs are going to be a huge portion of the future of cryptocurrency, and God willing, other sectors of our life. But again, this isn't about DAOs. But they are a very important part of this last piece with regard to governance. The other piece to this was coordination. And there's a lot of different aspects to coordination, a lot of which, for example, DAOs would certainly help to facilitate. But I also look at this as part of coordinating between blockchains. And BC, tell me if you think I'm off base, but to something we mentioned in the last video where we were talking about stuff like bridging and so on and so forth. I think that, again, it's obviously going to be a technological advancement, and we've mentioned that all the way through this whole advantage and disadvantage video we're doing. But I see that is going to be, or my opinion is that's going to be a major aspect, that kind of coordination and ability to interact between chains and platforms as simply as possible, as a huge advantage to the cryptocurrency space versus our current finance system, just to pick finance at this point. What do you think? Am I way off?
No, it's going to be a very, very big part on how things move forward. I think you'll kind of see things like modular blockchains be a really big proponent of that coordination, both between single chains, certain DAOs kind of coordinating with each other. Because I'll take it back to the government aspect. You might have your local county that's doing something, and the county right next to you is not really very well coordinated with each other. The road, you're driving from one county, super nice and smooth, and as soon as you cross into that other county, it's all poop. And you kind of just bouncing along. You're like, what the heck happened here? This road was so nice. Well, it happens here all the time. And that bridge, say, between the one chain and the other chain, needs to be run extremely smoothly. That way you don't have that road that's running all nice and smooth here, and then it gets over to this chain, and then it's just all crap. So that's a very nice aspect that I hadn't really thought about it on.
Excellent. Well, good. I'm glad I'm on the money, man. I'm glad I'm on the money. All right. Listen, again, we want to be respectful of the time with everybody. So I'm hoping that we gave you a lot of good food for thought here, a lot of things. And again, all the links to help you do additional research and so on are in the description. Please go ahead and check that out at the end of this video. But BC, I'll tell you what, why don't we try wrapping this thing up, maybe hit some of the highlights, and then we'll call it a day. You want to start us off with the wrap up?
Most definitely. We've talked about a lot of advantages here. I would say that the biggest advantages of crypto is that it is transparent, that you can see every single thing that is happening. I'd say the fact that it does it extremely quickly, the accessibility to absolutely everyone, and not just accessibility, but the ownership that comes with that access are very, very big key points on what gives crypto some advantages. I will also say that the biggest advantage of crypto is really that it just moves extremely quickly to solve all of these problems. So that's something that TradFi really doesn't do at all. It's kind of stuck in this old antiquated system where, hey, you give me a check, we'll cash that bad boy in a week and a half and you'll have your money.
And you'll like it.
Yeah, you don't get to have your cake and eat it too in TradFi. You get your cake, but it's held by them, and they'll let you kind of look at it through the through the app. You know?
Oh man, that's so funny. That's so funny. It's true. You know, that's it. This is the way we've always done it. You know, that's their
cool, bro.
That's their thought process, man. That's their thought process.
It really is, and that's what it's like. Well, that's cool, bro. But I've paid plenty of people with crypto. Where with my YouTube, I need a service done. This guy does said service. I'm like, hey, bro, I don't want to pay you in an asset that is constantly being diminished. So you got a Bitcoin address, and I'll send them over a little bit of Bitcoin. And in 4 years, if they hold that, they're gonna have more money than they would have if I had paid them in dollars.
Facts. And listen, for everything BC just said, I mean, again, bullish. We're both very bullish on this space, bullish on this is the future that we are moving into, and that future is going to be brighter than what we have currently. Again, you got to go through the temporary pains of that growth sometimes, and we've highlighted some of that here today, right? Things like, you know, sometimes you might be losing a little bit of your privacy, or some of these blockchains don't necessarily scale up to the Visa levels, and you know, the fact that most people don't want to deal with these kind of clunky interfaces, that kind of thing. But again, to me, as much as those are disadvantages, they become advantages, because you know that there are people out there working diligently in this space to try and get rid of those disadvantages and make things better here in the space. So as much as, again, right now, I guess it's a pain point, maybe. Future's bright, man. The future's bright. That's my opinion. I don't know. I think we've done this whole video justice there, BC. Is there anything that you think we should put out there before we do the final see you later?
To add on to what you said, when people say you are early to crypto, which if you're watching this in the near future of this having came out, you're in crypto early. You're not actually seeing the real world use cases of what crypto is actually able to do. We're all here just putting some money in some internet money and hoping to make a little more money. Yeah. But there's also a lot of technology aspects to this new way of doing things that doesn't just have to do with money. That's what they mean when they say that you are early to crypto, that the real world use cases of cryptocurrency are not yet in place. We are just now starting to see the adoption. And I think it's funny, it's the adoption by the people who are going to get replaced by crypto. The BlackRocks, the Vanguards, all of those people are adopting crypto and not even realizing that that's the system that's there to replace you. But
amen. It's like training your replacement, baby. Yeah. It's a fact. You know, I don't think I could have wrapped that up any better. I'm not even going to say another word except to say thanks for being here, BC, because I'll tell you what, BC, again, shout out, credit where it's due. BC put a lot of the information that you've heard in these last 2 videos together. And thank you to you for doing that, BC. I really appreciate it. And thank you again for being here. And I know you'll be back in some future videos, but I really appreciate you. Thanks, man.
Not a problem. As always, it's a pleasure to be here and giving the people some education.
So what did you think about that discussion with me and BC? Did you appreciate my story time? I'll tell you, it's pretty telling when banks don't even trust each other and themselves for that matter. All right, let's move on because the education in the cryptocurrency space needs to continue. And to do that, head on over to this video right here, and I will see you there.